All right, homework, chapter 2. I am gonna work through all of the questions. I'm gonna do, so last week I broke them out by three parts. This week I think I'm just gonna move through all 12 questions and you can maybe fast forward through this. If you get stuck on question 6, you can kind of go halfway through the video and sort of follow along. But this is what I'm looking at. This is my first question in the homework, and it's asking us to calculate or create T accounts. And if you remember in the lectures, the first step really is observing the transaction, putting it in the journal. Then the second step is taking or posting information from the journal into the general ledger or the T accounts. Then we would want to sum up all of the T account balances and put those balances in the trial balance. Then once everything is in the trial balance, we would create the financial statements. So this is sort of midway through the process. I'm looking at the cash account. Remember, we were saying that cash is an asset. It goes up with the left side of those T accounts because assets are on the left side of the accounting equation. So I would total up all of my debits, and then I would total up all my credits, and then present the net result in one of these two boxes, depending on what that is. So if I were to add up all the debits, 300 plus 500 plus 220, I'm looking at 1020 on the debit side. And then if I were to add up all the credits, 250 plus 260, I'm thinking that gives me 310. So I would subtract 310 from 1020, which is which is 710. So I would just type in 710. And that's the way that I think I would track this question. Obviously, I got it wrong. Oh, the answer is not complete. Uh, I still got it wrong. Am I not? Let's see here. It seems as though my stupidity knows no bounds. The total debits are 1020. The total credits are 510. And therefore, I think our ending balance would be 510. I don't know where I got 310 from. And answer isn't complete because I haven't done the other T accounts, but I have gotten the ending balance for cash. Man, that's pretty bad. I get the first question, the first part of the first question in the assignment incorrect in front of everybody. And I'm not even going back and redoing it. That's how confident I am in my stupidity. Anyway, question 2. Moving on. Question 2 is asking us to observe all of these transactions. So the first transaction is on May 15th. We need to observe all those transactions, and then we have three things that we need to do. We need to take transaction A and talk about what the impact is to the accounting equation. Then we would take transaction A and we would go into the journal and do a journal entry for it. Then, after we do all the journal entries, we would then post all of the transactions. And so I could post transaction A to the T accounts. So I might just go all the way back to the beginning. So if I were to if Deshaun Tyler opens a landscaping company called Elegant Lawns by investing 79,000 in cash along with equipment of 39,000 value in exchange for common stock. So he's contributing two things, cash and equipment, and you can totally do that. Um, and in exchange, we're going to get cash. So the question is, what's the sum of 79,000 and 39,000? And I promise you, if I couldn't add up 350 plus 260 in my head, I can't do this one in my head either. So I get 118,000. So 118,000 of assets goes up, and then if I contribute stock, sorry, if I exchange cash and furniture in exchange for common stock, then my equity would go up by the same amount. I think we learned that from chapter 1. Thank God I got that part right. Instead of moving on to the rest of the transactions, I'll let you guys do those transactions, but then we would do the journal entry. We would include the date, and maybe I'm supposed to put A here, and then include the date. So here's our journal entry. I think I would debit cash, account 101, and then I would debit equipment, account 167. The amount of the cash was 79,000. And again, cash is an asset. It's on the left-hand side of the accounting equation. Therefore, it's got a left-hand side balance. Same goes for equipment. Left side of the accounting equation. Therefore, it has a left side account. And then we would receive stock in exchange. And I think we said it was 118,000. All right. That's how we do journal entries. I covered that in the lectures. Um, then we would go to the T accounts. And then I would just take all of the information that I posted in the journal and I would move that into the T accounts. And I'm not going to go through that. Hopefully, you guys have that on your own. Question three. Question three is asking us again to do journal entries based on these transactions. I'm just going to pick May 20th. On May 20th, the company paid 600 in cash towards the payable for energy efficient supplies. So the two accounts that get affected on May 20th are cash. Cash is an asset, and we're using cash in this example. So I would credit cash on March 20th. And then we're saying that we're putting the cash towards accounts payable from the purchase of energy efficient supplies. So there was a previous transaction where we purchased energy efficient supplies, and that was on May 3rd. And so now we're paying it down. Accounts payable is a liability, therefore, it typically has a right side balance because it's on the right side of the accounting equation. So if I wanted to lower accounts payable, I would do it with the left side of the T account, right? And again, I recognize that this is May 1st, but I'm just going to do the May 20th journal entry for you guys. So it's accounts payable debit of 1,100. And then it's cash, a credit of 1,001. All right. Moving on to question four. I think question four is the same thing, really. It's just asking us to take the entries and do journal entries for them. And I think at this point, I'm just going to keep moving on. Um, I personally think that we need to understand the accounts that go into the balance sheet, right? So assets, what are the specific example of assets? Liabilities, what are those? Equities, what are those? We need to understand those like the back of our hand. And then we need to also understand, okay, if I want to increase an asset, am I doing that with the left side of the T account or the right side of the T account? And then if I want to lower an asset, am I doing that with the left or right side? On the other end, how am I dealing with liabilities and things like common stock and revenue, right? Those are on the right side of the accounting equation. Therefore, they typically have right side balances. But then I'm looking at expenses and dividends. Those are on the right hand side of the accounting equation, but they typically lower what's on the right side. So we want to use the left side of a T account to lower equity and liabilities. So expenses, they typically have left side balances. and dividends, they also typically have left side balances. These are the kind of things that I think we really want to know like the back of our hands at this point. And so if we do know those things, the journal entries should flow pretty easily. And if you're looking at transactions and you're struggling to identify the accounts that are getting affected, whether those accounts are assets, liabilities, and equities, then I would highly encourage you to stop and take some time to memorize that stuff. And I'm not suggesting that memorization is a good thing, but I am saying that the better you understand, the accounts and debits and credits, the easier everything else is. All right, question 5. Every once in a while, I have a look at what I look like in this camera, and it sends shivers down my spine. But nonetheless, I'm sharing the video with you guys, with me included in it, just to make sure that you have a more memorable experience. Anyway, moving on to question 5. So question 5 is we're at the very end of the process where we're creating the financial statements. And we're given a list of accounts. And from this list of accounts, in this particular question, we have to create the income statement. For the income statement, right, is it as of December 31st or is it for the month end, December 31st? Listen, the income statement is a period of time. It And so when we are creating the income statement, the reader needs to understand, hey, is this our net income for December 31st? Is it the net income for the month of December ending December 31st? Is it for the year ending December 31st? Because that's going to have a significant impact on the interpretation of the information that's included in the financial statement. So in this particular example, they're asking us to do the income statement for the month of December. And so the date is going to be for month ended rather than as of December 31st. So it's helpful to the reader. And then again, we're probably going to want to include revenues first. And so I would go up to these accounts and I would go pick through the revenue, and I'm pretty sure I would include 14,700 in service revenue. Just right here, 14,700. And I would choose the account would be service revenue. I'm not going to do the rest of the question because I feel like this is review from chapter 1. But this is the way that we would approach this question. Again, if you were having trouble remembering what goes in the income statement or the statement of retained earnings or the balance sheet and where the specific components of the balance sheet come from, this is an opportunity for you to go back to the PowerPoint slides. There are some really good slides in chapter 2 that present the income statement, balance sheet, statement of retained earnings, etc., that I think would help tremendously when you're doing this stuff. But we do want to get to a point where we are, without reference, remembering what goes on the income statement, right? So we would know, hey, we're creating the income statement. Cash isn't something that goes on the income statement. Likewise, I think we would know accounts receivable, that's an asset, it's not going on the income statement. Common stock, that's an equity, it's not going on the income statement, etc., etc. Question 6, from the same set of information, now we want to do the statement of retained earnings. And the statement of retained earnings, again, is for the month ended because one of the components to the statement of retained earnings is net income. And I'm not going to get net income from these data up here. I'm instead going to get the net income from the previous question. So when I'm done with the previous question, then I can come in here and say, okay, what was retained earnings at the beginning of December? And if I'm not seeing retained earnings up here, I'm thinking that's 0. Then I would take net income from the previous question. Then I would subtract dividends. and that would give me my retained earnings balance at the end of December. Question 8. This is the this is the balance sheet. Hopefully, well, let me back up. The balance sheet, here is where we would do as of December 31st. So the balance sheet is really a snapshot, right? It's a point in time. How much cash do we have on December 31st? So again, I'm going to start with my assets. I'm going to go with cash first. I would get cash up here, 9,500. I would do all of this. The one thing I do want to point out is that when we get to our equity, where would my equity be? Sorry, here it is. Equity. I have two components of equity. I have common stock and I have retained earnings. Now remember, retained earnings comes from the restatement of retained earnings that we calculated in the previous question. It does not come from a list of accounts. Everything else comes from a list of accounts. Common stock comes from a list of accounts. And then down here, I would have total equity, I think. And then further down, total equities plus total liabilities. And this would be the sum of all of my liabilities that would be up in this section and all the equity that I have down here. Question 8. Question 8. This is a trial balance. I don't know that we've done a trial balance yet, but I have a bunch of transactions and I need to interpret these transactions and determine what T account those fall into. So if I check my work, I obviously haven't done it. Unfortunately, it's not going to show me. But I think you're going to be able to, when you guys start doing the homework, you should be able to take these data and put them into T accounts somewhere down at the bottom of the schedule that or page. Then once you have the T accounts, you would sum the T accounts up, figure out what the ending balances are. Then you would throw the ending balances up here. And so again, the trial balance, I would just have cash, and cash would be all of these transactions that impacted the cash T account. I would add up the debits, subtract the credits, figure out what the ending balance is, and put that here. And then I would hope at the end, the trial balance ties out. The debit column equals the credit column. This one, same type of issue. More data, create the income statement. This one, more data, create the statement of retained earnings. Very similar. More data, create the balance sheet. And then finally, this last question is tying everything together. This really is a great question, right? So we have a bunch of transactions from March through March 31st. First thing we do is use a journal and record all the transactions. Then we would post all of the journal entries to the general ledger accounts. They're not showing us anything because we haven't done the journal entries yet. Then we would take the ending balances of all the T accounts and we would throw them into the trial balance. And again, the further you get in the question, the more rows you're going to have. Then from the trial balance, we would create the income statement. Then from the trial balance, we would create the statement of retained earnings. And from the income statement, then from the trial balance, we would create the balance sheet. But we would keep in mind that when we got down to retained earnings, we would take those data from the statement of retained earnings.